Okay. All right, here we go. So, this was April 24, and I just wanted to go over a few things here with the market structure and using volume analysis, including the market profile and the volume profile to show and give a good idea of what you could have done and how you could have traded the open. So let's start off by just turning off everything so we can see that the market profile. We could see the market open started about right about here, and it was relatively pretty choppy in the morning. So let's look at that. Here we go. So let's look at the pre-market. So we have the Asia session right here. This is the called the dead zone before the London opens. Asia session is when Asia trades. So it's kind of a move up and then down. And then this is when London opens. You can see it here. London high, London low. And so we actually got some pretty amazing moves in London. And then this is the New York Open, right? And you could turn these off. So people ask me how to turn a few things, configure this. Well, this enables Asia, London, and New York, right? And that will colorize the New York session, etc. I'm going to turn these off for now, reduce the clutter. And so here, this is the pre-market in London. You can see it's a nice down move. And we'll turn on the volume here. So one of the things that's interesting here is, people have been asking me some questions about, well, what is the strategy for this, right? So you have this is the SSL, basically the 20 period SSL. We're on a 2-minute chart. And so you go, okay, so what's the strategy here, right? How would you even trade this? So first of all, let's look at what this is. This is a squeeze, right? And you'll look at the indicator. Just we can look at it right here. Squeeze off SSL, and you have a squeeze right here, right? And what this is showing you is that this is a period which is pretty dangerous to trade in here unless you know what you're doing, right? So a lot of people, what they like to do is wait, especially right here. Like you have this squeeze, price is not going anywhere, you're losing money taking a trade, and then the squeeze fires, they take the trade. And the simple strategy is just taking the trade from here and then closing here and then jumping in, right? That's like the simplest strategy, right? It tells you like, hey, there's volatility coming in. You may not want to trade this right now, right? So perfect example is the open. But what I really wanted to show here is volume, as this is the visible range volume, right? So this is set to just visible range. This is not, have 24-hour daily and the New York session, right? So what I want to, and so this is the open, first bar, volume comes in, we're still in a squeeze. This is actually a valid trade, okay? You have a break of structure. It then comes back up to the strong low, the resistance zone, which created that break of structure. So it's coming back up for retest in a low volume area, right? And so that is actually a valid trade. You put your stop basically up there, right? We could do a short. And what you do is you actually target to put a right. You would put your stop right here, and then you would target, right? Let's see, it's taking a trade. So you would actually target that low for the first trade, right? And that actually worked out. If we scroll here, right, you would have got that next break. Actually, yeah, you're right. The break of structure would have been right here. So you would have targeted that low. And as soon as you get the break of structure, you know, you're trailing. Basically, you're moving, your profit, right? So you would want to trail at that point. So here's what I wanted to make a point on. So that was the first trade which you could have taken. I was more looking for the long side of things. And I'll tell you why. So right here, we had measured moves, right? So this trade, if you had taken it, was a 50% retracement, and the risk was $232 on a full-size contract, and that was $1,400 trade. This next measured move, and I always check these because I want it to accurately reflect the trajectory. And all three of these actually looked pretty good. So this was another one, which was, $1,500. And then this one as well. So this, I think that was the measured move to 27,185. And then this one was another one, right? And so that actually is a valid 618. The calculation is there, right? And that also, so there are three trades actually here. But I was more concerned about the long. And I will show you why. So first of all, it's a very bearish day. We're at the 200 period EMA, which many people use as a general guide on the 2-minute. And I'll show you why. So we're in a squeeze, right? So comes back down. And at this exact moment, you're in somewhat of a balanced range. Okay. This profile is balanced. And so what I want to bring up on our website is that we actually have a whole set of instructional courses here. And I want to go to the price action and measured moves. Here we go. So this is from Peter Steidelmeyer, who created the market profile. And he says, the core concept is simple. Price is always searching for the level where buyers and sellers agree on value. When they agree, price chops, right? So right here, this is a balanced profile, essentially. Okay. No one's in control, really. Buyers and sellers. However, the trading strategy for a balanced profile, let's look at this. A balanced market, price bounces between a ceiling, value area high, and value area low. So, right, this is exactly what we're looking at. It's a balanced profile. And so, how to trade it? Sell near the top. Target the middle of the range for your exit. Do not chase breakouts, right? Wait for a real break of the range before switching to trend following, right? So essentially, you're sell at the value area high, buy at the value area low. So let's apply that, okay? Let's look. So at this exact moment, right here, you are at the value area low right here. Okay. We also have a measured move. We have two measured moves saying, hey, and these are on the screen as you're trading here, right? These are not after the fact. So the point is these measured moves, right? These are pretty big range, but this actually looks like the 618. If you were to take low and high from here, right? That is the 618. I mean, it can't be it's as clear as day, right? So you're right at the 618 retracement. So let's take that trade, right? So let's say we take a long, right? Let's say we put it right there. And our stop, let's say the stop is the ID low. So we're risking quite a bit here, actually. But let's say we tighten up the stop, right? Let's say we even risk less than that, right? Right here. So you take that trade and just to target the IB high or the value area high, right? And what happens, right? Goes to target. Now, here's and it actually extends. In fact, just that trade alone goes all the way up, continues to make breaks of structure. So actually that trade ends up being, a $4,000 trade, right? And then like a typical Friday, it just chops the rest of the day, right? And even if you wanted to chase the breakout, which I don't recommend, breakouts usually do fail, but in this kind of market where it's extremely bullish, it's just been nonstop breakouts, right? But you can see even chasing the breakout here on the first attempt, you got destroyed, right? Even if you took any of this, you got destroyed on the first attempt. So chasing breakouts is a little bit risky, but even if you took the breakout, right, you're still up $2,000, right? So, and you can tell, right? Change your character, finally get little breaks of structure, but it stayed up pretty much the whole day. So here's the other thing which I like, okay? And this is using order flow, and it's the stacked imbalances, which I've shown in previous videos, is let's turn these on. So this is going to be a little bit, maybe a little bit overwhelming, but these are 5-minute stacked imbalances. I'm going to turn some measured moves off, clean up the chart a bit. Let's just keep it real simple. Yeah, maze. So this is the bullish move from pre-market in the Asia session, right? Nonstop stacked imbalances. Then right about here is when you get your first bearish stacked imbalance. Let's do this. Let's go here, stacked imbalances, passive. Let's increase the opacity so you can really see them. Okay, so this right here, look what happens, right? It becomes the resistance in the morning. This becomes the ceiling right here, the stacked imbalance. Takes out these stacked imbalances. These are bullish. More come in, fades them. They take them all out, right? Now, mind you, these are the London stacked imbalances. They're a lot less volume, right? So the first time we get a bullish stacked imbalance is not on this move, right here, right at the value area low, right? The volume profile, value area low. And that's the thing, right? That's the important part. That comes in, you got to retest. And we don't start getting bearish stacked imbalances where they try to short until about right here. And then it chops the rest of the day. But all day long, right? You know, had a nice trend line, which you can enable this. If they're helpful, this is trend line trading, a little bit different of a strategy, but nonetheless very important. But you can see, right? Bullish stacked imbalances, some bearish, but generally stayed extremely bullish. And look at this. This is a move, right? That's a monster move with 3 stacked imbalances, 5 minute. So that's what I wanted to show you. And then on a footprint chart, let's look what it looks like, right? This will kind of help explain things. So let's look at, this is the move right here, actually. So this is the stacked imbalance from the value area low. And let's take a look here. So the volume is here, right? And comes up for the first move, pulls back, and right here, these were the buyers, right? Pulls up, stacked imbalance, which is what you see on the chart. Goes up, another one, right? And that's the mega move that you see, right? So this is just a nice way of plotting it. So in case you don't want to look at all the footprint data, the cumulative delta, as you can see, it went green. Moving averages crossed on the delta. And so that was a nice, $4,000 trade, right? So this is just the simplest look at things. I just want you to see. It doesn't need to be too complicated. You don't need to trade in the squeeze, but just a little more analysis on the volume, right? And the measured move, right? So let's see if the target hit. I mean, look, it doesn't happen every day, but let's see. Let's see if it did go to target. There you go. 27,468. That one hit though. Look at that. 27,445. Right? I mean, is it magic? Right? We'll never know, right? Here was another one. That one hit at the 50%, 27,459. Right? So, anyway. All right, that's about all I got. Let me know if you have any questions. Let's look at one last look on the TPO for that day. This is NQ. So, ABC. This is each of these. A is a 30-minute period. So this is the regular trading session, right? So you got open above value, right? That is very bullish. Generally, it was a double distribution day. It was an open auction. So what that means is that price oscillates around the open with neither OTF buyer nor seller present, lowest conviction, or live streams unlikely to hold. So what that means is that, yeah, it's a chop day, right? Chop range for the initial balance. And then it eventually gets going. You get single prints, right? And this right here is a buying tail. This is what you want to see, right? A buying tail. That means that the period, it was not filled, essentially, right? The period was, it's what you want to see in an auction when there is aggression, right? So you want to see the buying tails, right? That shows aggression. Okay, I don't want to go into a whole profile course here. There's more information on the website, but we can definitely look at that on the market profile. Let's see here. Market profile. So here we go. Fingerprints. Where only one letter appears, meaning the market visited that price during only one 30-minute period and never came back, right? So this is aggression, and that's the point. Let's look at another thing. There you go. Excess at the low. Buyers rejected sellers with conviction. Healthy sign in an uptrend, right? So there you go. So this gives more information on the profile if you want to look at it. But we had buying tails and single prints and a breakout of the initial balance. Anyway, thanks guys. Let me know what you think of the video. Yeah, or send me some comments. We posted more information on how to use this, but thanks a lot.